Martijn Rozemuller, thank you for coming.
Thanks for having me.
Big Boss, the CEO of VanEck's in Europe.
Yep.
You started in 2008 Think ETFs, and that was bought by VanEck. So you're also from the Netherlands. We know each other for like maybe around 10 years from the Netherlands. And so you are also bought by a Dutch company. VanEck with the CK is a Dutch name, no?
Yes.
So you are now a complete Dutch company?
Well, it's a Dutch name, but in reality, it's actually a US company. The VanEck family migrated to the US in the 1920s, a long time ago. And the grandfather of the current CEO, he was the guy that migrated. His son started an investment fund in 1955, also way back.
Okay.
And they were sort of known for doing stuff a little bit different. So they started investing in international equity instead of just US equity. And then at some point in 1968, they started to get an interest in gold. So they were starting to invest in gold, and people thought they were crazy because gold was pegged to the dollar.
Mm-hmm.
But he thought there was a good chance of inflation and that at some point gold would become much more valuable. In 1971, actually that happened. And then, I guess that was their claim to fame. The business grew and they started doing other things as well, like emerging markets. And in 2006, they started with ETFs. I have to say they were probably a little bit late to the game with ETFs, but still in time. So today it's the biggest part of our business.
And you gave a presentation yesterday evening in our office, fully booked. And this morning, it's Friday morning, by the way, you will do it for an investment club here in the office. And you showed in one of your sheets that the assets under management, you have like more than 100 billion US dollars. So that's quite a lot.
It's a lot of money.
How big is the company in the US, for example? Because you have some really huge players.
Yeah, like the really big ones like iShares, they have over like $1 trillion. In the US, we're probably like a top 10
But
company.
still, if you are in the US, within whatever you do in the US, you are within the top 10. You are really an important player, no?
Yeah, exactly. And we're also quite well known, obviously because the business exists already since 1955. So in the US, I think VanEck is sort of like a household name, which in Europe, especially when I joined VanEck about 6 years ago, was very different. No one knew about VanEck.
No.
There were maybe one or two products that people knew about. So GDX, GDXJ, the gold mine ETFs. They were actually better known than VanEck as a company. So if I would talk about VanEck, people were like, I don't know, I never heard about you guys. And then if I mentioned GDX, they're like, GDX, I do know GDX. So but a lot has changed.
You were more famous for the product, not for the brand. Yeah. So you within VanEck, you build ETFs.
Yeah.
Most of you know what ETFs are. That are exchange traded funds. So that are funds that you can buy the whole day when the stock markets are open during the day. How many do you have on the shelf? How many ETFs do you?
In Europe, we roughly have 50 ETFs.
50?
Yeah, 50.
Oh, wow, that's a lot.
And I have to be a little bit more detailed here, I guess. So I should actually say we have 50 ETPs because most of them are ETFs. Some of them are ETNs, which are exchange traded notes instead of exchange traded funds. And the only reason we have those is that we wanted to offer some crypto exposure, and that was not possible in an ETF because an ETF has to obey usage rules, and that's about diversification and a lot of technical stuff. But in an ETF, you could offer crypto. So some of them are ETNs, most of them are ETFs. And to put it into perspective, the 100 billion we manage globally, about 10 billion of it is European assets. So the assets that I'm responsible for in Europe, those are the 50 products with approximately 10 billion.
But still, if you look at the 100 billion and you started in 2006, so you grew a lot within 18 years. So you make the ETFs. Before you're going to explain how that work, how long it will take, and how it work in practice. You have a broad range of different kind. You mentioned you have an ETF related to crypto, but you have also gold, and you have also underlying stock market. Why are you unique? What are you doing differently than the iShares, the big players in the US, for example?
I think there's a couple of things that we do differently. First of all, we try to find exposure types that aren't that common. So for instance, if you look at US equity, most people would think of the S&P 500 or the Nasdaq and would build an ETF based on that index.
Yeah.
What we did in the US is we use a Morningstar index called the MODE index, and a MODE, for people who don't know it, and actually I was one of them 6 years ago, but a MODE is actually sort of the defense canal that surrounds a castle. So it's a way to defend yourself from your enemies. And that's why Morningstar picked that name, because the MODE methodology tries to identify companies that have a strong competitive advantage. So they are able to compete with their competitors because of they have really great intellectual property, or they have a really great scale of size, or they have some cost advantages in another way. And that's sort of an idea that really works. So the MODE ETF in the US is really, really big. Not as big as the S&P 500, but we don't need to be that big, but it's like I think 12 or 14 billion at the moment. We also have a European version of that, and I think that's what makes us different. Also, we bring some thematic ETFs. So if, for instance, the gold miners I mentioned earlier, that's a very specific theme.
You're more specialist.
Exactly. I think we're sort of. When I did an interview many years ago, when we were just bought by VanEck, we did an interview in the Netherlands with Financieel Dagblad. And Jan VanEck, our CEO, he was in the office as well, and we did interviews similar to what we are doing now. And we were talking to the journalist, and we said, well, you have to think of us not as Heineken, but more like the crafted beers. So we're sort of not the high volume player which brings like the mainstream stuff, but we're the smaller firm that brings you really crafted special stuff. So that's what we do.
So you probably have also some ETFs that you like the most, because you have some specialized ETFs. What's your favorite one?
It's a very difficult question, and obviously one that I get more often. And
why, of course. That's more. It's always about the why. Yeah.
So the viewers probably don't know this, but you do. I have 7 children, and it's almost like asking me which is your favorite child.
But then you don't give an answer.
And yes, I can't answer. No. So in this case, it's also difficult, but I can answer. And I think there are. Within the 50 ETFs or 50 ETPs that we currently offer, there's 5 that I sort of started with in 2008. That's 2 of our local indices in the Netherlands, and then 3 asset allocation ETFs, or sort of mixed asset ETFs. We call them, the VanEck multi-asset allocation ETFs nowadays. And they are really dear to me because, not just because I sort of designed them myself, but because of a really simple fact. I think we are all about helping retail investors with their investment needs, bringing products that are valuable, and sometimes that are very specific types of exposure. But these are really sort of the base or the core of any portfolio. So if you want to get started, it's very difficult to pick which investment you should start with. These products are basically available in 3 flavors. So there's a conservative one, a more neutral one, and a more aggressive one. And the way they differ is basically how much equity is in there. So it's basically a default portfolio. It's sort of like default asset management, if you will. And it makes for a very diversified investment. So there's equity, there's corporate bonds, there's government bonds, there's real estate.
Within one ETF?
Within one ETF.
And different profiles,
Exactly. So it's sort of, a really good core.
It's a kind of asset management.
It's kind of asset management, but then really default. It's like off the rack type of. Well, but if you look at some private bankers, they use the same system. In the end, they do.
They do quite cheap.
And it's much more expensive. So these are really simple products, but they work really well. They're about 15 years old by now, so they have a really nice track record.
You can see it on screen. We put it in the screen. It's really you can within your existing portfolio you can have like a little asset management portfolio.
Sort of like a core of the portfolio, and then you can start to think about other stuff they would like to do. Maybe some themes. Maybe do something with options. Maybe maybe make it as exciting as you like, but then the core is really sort of stable and boring.
And you can also buy two, for example, so you can mix it, make it even more specialized for yourself.
Yeah, sometimes people say, well, I don't want to be too aggressive, but I think the neutral one is maybe too boring. Well, if you buy them both, you end up with something in between.
And you can decide how much you allocate to one.
Yeah.
Okay, another question. If we decide here this Friday morning, to make a Spanish ETF based on Spanish companies that are related to anything with the sun, for example. So we make an ETF. Or we do also Portuguese in it, because it's a little bit the same. Same if you look at the world at the same height. How long does it take you to have that ETF on the market?
I wish. No, it's about 4 months. It's a long time for such a simple product. But most of the time is basically waiting for the regulator to give us approval, because obviously we cannot just design a product and bring it to market. We need to have approval by the regulators, and that takes a bit of time. But also the legal stuff. So there's a lot of documents we need to sign with the exchanges, with the liquidity providers, with the administrator. Every ETF, obviously the assets are administrated, in our case, with State Street. So there's a lot of bureaucratic stuff we need to do.
4 months. So when you decide on an ETF, you have to also take into consideration that it's not something that is really interesting at that moment, but you have to have a long horizon and a vision on it. Yeah,
exactly. And I think that simply is the case for most investment opportunities people have. You have to have a long-term belief. It's always very. It sounds really nice if you can make a quick buck, but in the end, I think
that
mostly
doesn't work.
It's a long-term view.
And when ETF is on the market, and I'm a private investor. I go to my broker, I go to the market, and I buy the AX ETF. How does it work? I buy directly from you?
No, that's one of the big differences between a mutual fund and an ETF. An ETF you buy on exchange, so not directly from us. We only deal directly with the liquidity providers. So they are the people that will give like a bid and an ask on exchange. In order to do that, they need obviously to have some stock. So they will come to us and we'll create an ETF for them in sort of a larger scale, so usually 5 million value. And then with their stock, they can create the market. And if a lot of people buy the ETF, obviously their stock goes down.
They knock on your door and they have to buy.
Create new ETFs. And by the way, the system works in a way that they are not too vulnerable to market movements, because if they have 5 million over ETFs and the market would go down 10% or up 10%, that would mean that they would earn or lose 500,000.
That's not their business model.
No, it's exactly. So they hedge their stock. So if for instance they have an AX ETF, they will have a short position in the future in order to mitigate or hedge the market risk. And then that's how it works. So someone who buys our ETF, their money basically was already invested even before they bought the ETF.
But the good thing is that if you compare it to stocks, if you want to buy something and there is no seller, it has an impact on the price. But with this product, you have always really good prices, and also what you see, the spreads are normally very tight. So you get, as a retail investor, you invest in a product where you don't lose too much on the spread. So I think
there's no discount or premium, so you'll always pay really close to what we call the intrinsic value. So that makes it a great instrument.
Yeah, so that's why we talk a lot about ETFs also in this vlog, and also if we sit with clients, I think it's even we work with an ideal portfolio, and that are building blocks, and then the biggest building blocks that are ETFs. And you can, and on top, I think your biggest position should be baskets, ETFs, and then you can really widespread ETFs, and on top of that you can do sectors, and on top of that you can do individual stocks. Then you have a balanced portfolio.
Exactly, and you're diversified, and I think diversification is the one true free lunch.
Boring, but it's good.
Yeah, exactly.
thank you very much, Martijn.
You're more than welcome.
Thank you for watching. Give us your thumb. See you next week.